Hello and welcome to Business 360. I'm Shireen Bhan. The top stories that we're tracking for you this evening. The Sensex and the Nifty end marginally higher after a choppy session. Both indices have lost 1% this week, snapping a 5-week winning streak. Indian bonds rally, yields cool off. A Financial Times report says JP Morgan is sounding out investors to check if they want Indian bonds included in their global indices. Stock markets on tenterhooks across the world as investors await the US Federal Reserve Chairman's speech at Jackson Hole later this evening. Crude oil prices remain firm with Brent trading around the $100 mark. On his last day in office, Chief Justice of India N.V. Ramana allows live streaming of the proceedings of his bench. This is the first time the Supreme Court's proceedings have been shown live to the public. Senior advocate Dushyant Dave breaks down in court, bidding an emotional farewell to Justice Ramana. The Supreme Court raises the ceiling for iron ore mining in Karnataka, says conservation of the environment and economic development must go hand in hand. The court had lifted the ban on mining 3 months ago. Banks in India see profit erosion in the first quarter due to treasury losses and higher operating expenses, but asset quality shows significant improvement. Veteran Congress leader Ghulam Nabi Azad quits the party, launches a blitzkrieg attack on Rahul Gandhi, calls him a non-serious individual who's allowed inexperienced sycophants to run the party and sidelined all senior and experienced leaders. Less than 48 hours to go for the demolition of the Supertech Twin Towers in Noida. 3,500 kilograms of explosives will be used to bring down the buildings in just 9 seconds. Residents in the area have been evacuated. Concerns about the impact on nearby buildings still linger. A special report coming up. Well, let's start with what was a volatile session on the Lal Street. The Sensex and the Nifty ending with minor gains after some pretty wild swings through the course of the day. Metals and energy stocks rallied, but pharma stocks were subdued. For the week, both indices have lost 1%. And with this, a 5-week winning streak has come to an end. Prashant is here with the market action for us. Prashant, very volatile, but just about closing in the green for the day. For the week, down 1%.
It was a very volatile day today. I mean, the market started higher very, very strongly. It was a great start, and then through the course of the day did nothing. I mean, kept coming lower. The range kept contracting. At 3 o'clock, we got a real scare. The Nifty in 2 minutes flat sold off 80 points. And then, I mean, miraculously, by 3:30 by close, it recovered pretty much all of it. Not all of it, but almost 80% of what it lost in those 2 minutes. So it gave us a scare, but by close, I mean, it was a stable and a higher close on the index. Mid caps and small caps through the course of the day, much better, much more stable. 0.5%, 0.75% gain on both those indices. You know, old economy, energy, PSU banks, metals, that was the flavor of the day. So, you know, Grasim, Adani Ports, NTPC, JSW Steel, Titan, Coal India were the kind of stocks which did quite well on the Nifty, large caps that is. And there were losses in Eicher Motors, largely news-related, Indocent and Bharti. But again, I mean, the losses were 0.5% to about 1.75% lower, nothing major at all. You know, the texture of the market seems to be that the rallies are getting sold at higher levels, but the dips are being bought as well. So it's not as if bulls are being able to push higher the advantage, neither are the bears being able to take this market lower aggressively. And that may be because of the fact that the market here in India has outpaced every other emerging market for 10 quarters in a row. I mean, it's been stupendous performance, even from the lows of June, which was about 15,200. So maybe consolidation time-wise is required to digest some of these gains. In the very near term, of course, all eyes on the Fed Chair Powell and what commentary he provides as far as markets in the September Fed meeting is concerned. Back to you.
Yes, Prashant, we are going to be watching Jerome Powell's speech very closely, and you can catch the action live right here on CNBC-TV18 starting 7:30 p.m. Indian benchmark bond yields fell by 6 to 7 basis points on the back of a Financial Times report that JP Morgan is sounding investors to check if they want Indian bonds in the widely tracked emerging market bond index. Lata joins us now with more. You know, Lata, this has been in the works or on the anvil for a long time now, but are we closer to this being a reality?
Yes, that's the big chatter in the bond markets today. bond yields fell because of this, the report, a Financial Times story that everyone is WhatsApping to one another. The report says that JP Morgan, the bank, has been sounding out investors in its, which follow its bond fund, as to whether Indian bonds should be included in their index. FT has only quoted sources, they have not named anybody, but the news was enough to drive down bond yields. Now, what Financial Times story says is that the JPM management bank is asking for Indian bonds, asking investors whether the Indian bond should be included in their JBI EM Global Diversified Index. That index includes all the local currency, you know, like the rupee denominated bonds. The consultations apparently opened in summer. Now, by summer, I would assume they mean June. And they consulted fund managers who account for 85% of all the assets which, track the JPM indexes. And what FT says is that they started this consultation because there was a growing chorus of investors who wanted Indian bonds included in the index. The calculation is something which Goldman Sachs has done and others have done, that if India gets included, $30 billion of funds can flow into Indian bonds. And just as a background, India has designated some bonds as FAR bonds, that is fully accessible route. Otherwise, foreign funds can buy only about 5% of outstanding Indian bonds. But of that, some bonds, 5-year, 10-year, 7-year, etc., have been designated by the Indian government as fully accessible, which is what foreign investors want. They want liquidity. And only if all these FAR bonds are included in the JBI index, India's weightage will be 10% of that index. And any passive fund which follows that index will have to invest in Indian bonds as well. Now, JP Morgan actually meets in October to discuss the proposal, and the next month itself they can announce the proposal. So it can come as early as that. The FT report says that JPM and Indian government did not respond to the story.
All right, Lata, many thanks for joining us. Now, investors across the world are keeping a close watch on the Jackson Hole Symposium in Wyoming. The U.S. Fed Chief Jerome Powell will speak tonight, and markets are watching for any clues on potential rate hikes from the Fed in the near term. Here are top economists and Federal Reserve members with what we can expect.
What I'm really looking for is to say, when do we see the turning point in inflation? When can we begin to see where that terminal rate might rest? Because I don't think we know yet where that may have to settle out, but it will be higher than it is today for sure. Obviously, doing 75 in June and July sets a pace that I think the public is looking for. What changes that would cause you to step down?
He will not indicate whether it's 50 or 75. There's just too much data that we still have to get before then. What I think the market would like the best is for Chairman Powell to say we will continue to move against inflation, but we will be looking at what the data, the new data, is showing us.
My base case expectation from the Fed is for 50 basis points and to give very little clue as to what they're going to do in late September today. So regardless of what the Jackson Hole talks cover, I don't think that'll be a very good marker for what the Fed will do at the end of September, simply because there is just way too much uncertainty.
Well, reactions on what we should expect today, and we will be live with the Fed Chief Jerome Powell's speech from Jackson Hole at 7:30 p.m. right here on CNBC-TV18. So tune in and get the CNBC edge. It was a historic day for the Indian judiciary. The Supreme Court conducted live streaming of Chief Justice N.V. Ramana's last day in the courtroom. This was the first time ever that the court's proceedings were shown to the public live on camera. It was in September of 2018 that a 3-judge bench of the Supreme Court had allowed live streaming of the hearings in the top court, except in sensitive matters. However, the live streaming was not adopted in practice till today. Now, there were emotional scenes in court, with senior lawyer Dushyant Dave breaking down as he bid an emotional farewell to Justice Ramana.
What is outstanding so far as Chief Justice Ramana is concerned is the persuasion with which he was able to clear the areas of the appointment, the vacancies. For the first time, we have had the full court of 34 judges sitting at one time itself. And this, I think, is a remarkable achievement for the purpose of the progress of the judiciary and the disposal of cases. We are losing an intellectual, we are losing an excellent judge.
The family of judges. You have taken care of that family very well. And I tell you why. When the sea is calm, the ship will sail. But we are going through very turbulent times. And it is difficult for the ship to sail. It is there that this court will remember you for having maintained that balance even in turbulent times. You have ensured that the dignity and the integrity of the court is maintained.
Your Lordships have been a citizen's judge. Lord, I speak on behalf of vast multitude of citizens of this country. You stood up for them. You upheld their rights. You upheld the Constitution. When you took over, I wrote that day an article. I was skeptical. I was skeptical after what the court had gone through. But I must say, your Lordships excelled our expectations. You lived beyond anybody's expectations. You did what is really expected to be done by this court. It was amazing to see. That real checks and balance, which is required to be kept between judiciary, executive, and the parliament, you did it. And you did it with a smile. Your Lordships really blessed this country with amazing constitutional morality, amazing constitutional ethos, and it will always be remembered for a long time.
Well, that's the Attorney General there bidding farewell to Justice Ramana. The Supreme Court has also passed some significant orders today. The case pertaining to the so-called freebies has been referred to a three-judge bench. The court said that the issue requires extensive hearing and has ordered for a constitution of an expert body to submit recommendations. The apex court also said that all welfare schemes cannot be equated as freebies and added that the fiscal impact of distributing freebies must also be considered. So this is a matter that now will be heard by a bench led by Justice Chandrachud. Some relief for iron ore miners in Karnataka. The Supreme Court has increased the annual cap on iron ore production in 3 districts from 28 million metric tons to 35 million metric tons. The districts are Ballari, Chitradurga and Tumakuru. The Supreme Court has also ruled that Insolvency and Bankruptcy Code will take precedence over the Customs Act. The apex court has ruled that the Customs Authority can only determine the quantum of duties and levies but cannot initiate recovery proceedings. The court also added that once moratorium under IBC is declared, custom authorities have only limited jurisdiction to assess the quantum and they cannot take steps to recover. Shifting focus now to Fin Street. Banks have reported weak operating profits in the first quarter, and that's due to treasury losses and higher operating expenses. CNBC-TV18's Abhishek Kothari gives us an insight into how banks have done in Q1. Abhishek.
Well, banking sector reported a weak operational quarter in terms of operating profits, which was marked by the fact that, there were treasury losses and higher operating expenses. However, net NPA ratio of the PSU banks fell to less than 2%, perhaps for the first time in last 7 years or even more. Let's take a look as to how the Q1 FY23 has panned out for the sector. To begin with, the P&L performance, GSEC yields had hardened in Q1 FY23. This had an impact on the treasury portfolio for many of the banks, and operating profits also of the banks declined by about 9% YOY and 10.5% sequentially. For PSU banks, the operating profits fell by almost 17% YOY and more than 15% sequentially, while on the other hand, for private sector banks, the operating profits grew by a marginal 0.5% YOY and fell by 5.3% quarter on quarter. The banking sector reported net profits of 44,145 crores, which was up more than 37% YOY, but it declined by 9.5% sequentially. So for PSU banks, the profit stood at 16,064 crores, which was up nearly 10% YOY, but it declined by 12.5% sequentially. While on the other hand, private banks reported a total profit of 28,082 crores, up nearly 60% YOY, but it declined by 7.6% sequentially. The total restructured restructured book of the sector now improved to 1.98% of the loans versus nearly 2.2% of the loans in the previous quarter. The lowest share of restructured book is of Kotak Bank, Axis Bank, CSB Bank, SDFC Bank, SBI as well as ICICI Bank. Now, mixed performance was seen on slippages front, was witnessed in Q1 FY23 given the fact that slippages increased by 7.3% quarter-on-quarter for the banking sector. Annualized slippage ratio, however, increased by only 10 basis point quarter-on-quarter to 2.32% when compared to 2.22% in the previous quarter. It was a mixed performance with respect to slippages. PSU banks saw slippages decline by 4.5% quarter-on-quarter, while on the other hand, in absolute value, we saw slippages increase by nearly 28% quarter-on-quarter for the private sector banks. The good news on asset quality is that PSU banks have now reported the lowest net NPA ratio in last 27 quarters or 7 years. It has now fallen to below 2% level. So gross NPA ratio of the entire banking sector declined to now less than 6%, that is about 5.94% when compared to 6.18% in the previous quarter. And net NPA ratio of the banking sector was around 1.6% when compared to 1.7% in the previous quarter. Loan growth momentum in Q1 FY23 is perhaps one of the best that you are seeing in last 4-5 years.
Abhishek, many thanks for joining us. Our former Chief Economic Advisor KV Subramanian, who's set to take charge as the Executive Director for India at the IMF, has said that at a glance, the GDP numbers indicate that the Indian economy has seen a V-shaped recovery. In an exclusive conversation with Lata, he said that India will lead the global economy going forward. Take a look.
The global economy is basically looking like one that will have very anemic growth, possibly in a recession, and very high inflation. In contrast, India will be the country that will grow the fastest among the large economies for sure, and will have inflation that actually is, will be in control. So I think, we do seem to be in a good spot. We will lead the global economy, this year and going forward as well. A rich economy like us, can you even expect that actually it will basically have the same uniform growth rates everywhere? I think that is just basically being in a utopian world. It has been a V-shaped recovery if you look at the GDP growth, and these kind of features are always there in any economy in a good year or in a crisis year.
Well, that is the former Chief Economic Advisor who's now headed to the IMF. We will take a break, but less than 48 hours to go for the demolition of the Supertech Twin Towers in Noida. A ground report on the readiness when we return.